G'day, Divergence Traders. Today is August 23rd, Wednesday. My name's Jason Sweezy. I'm a Divergence Trader. And I'm going to show you some trade setups. Okay? Now, the first divergence trade setup I'm going to show you is on the NASDAQ. Okay, we got basically a double bottom there. See that? And here's the line. Oh yeah, I already drew it in. Okay. So our entry would have been right there on the opening of this candle. Okay. It would have got in there. Stop would have been around 40 points. And it went up now 189 points. Now let's say 192 points. Okay. Now that was the only divergence we had today on the NASDAQ. But we had a few setup trades. So here's the open right here, this baton. And right here, when this candle closed lower right here, right on the close or on the opening of the next one, you would have got long. Okay? That's a long trade. And up it goes. Went up like 90. Actually, it went up. Went up 118 points. Then our next lower closing candle, meaning lower closing from the opening price of that candle. If you would have bought it, up it goes. Lower close, buy it, up it goes. Lower close, buy it, up it goes. And even up here, lower close, buy it, up it goes. Now, I want to read something for you today, okay, that I wrote myself back in 2009. It was the first page of my website that I wrote back then, called Forex Pipsnagger. I sold over 3,000 copies worldwide. I was very, I guess you could say, well-known, famous, whatever you want to call it, in the Forex trading world, okay? I was known by hundreds of thousands of traders worldwide, okay? And when I read this to you, it's going to make so much sense. You can always stop the video and read it yourself, you know, because I'm going to put it up here, the words where you can read it. And you're going to see how much it's going to make sense to you, and it's going to probably give you answers to your own questions in your mind, why most people will not buy in a major uptrend or sell in a major downtrend. I'm going to tell you why. One sec, please. Okay, here we go. Have you ever bought trade after trade all the way down? Then after you finish trading, you ask yourself, why was I buying? It was in a downtrend. If you have, don't feel bad. We've all done it. The reason why traders lose most of the time is because they're buying. Oh, shit. Sorry about that. I got to start that paragraph over. I keep talking, and the hockaloogie boogies keep coming up, and they stick to my vocal cords. Okay. Let's start over. Okay. The reason why traders lose most of the time is because they're buying when they should be selling, or they're selling when they should be buying. The fact is, most traders want to trade against the trend, resulting in loss after loss after loss. So why do we make the same mistakes over and over again? The reason? Fear. We fear that if we sell in a downtrend, we'll sell at the bottom and lose. We fear that if we buy in an uptrend, we'll buy at the top and lose. So instead, we try and pick the top all the way up, or we try and pick the bottom all the way down, losing trade after trade. Does all this sound familiar? If it does, we feel your frustration. We feel your anxiety, and we feel your anger. And what you need is something to tell you that it's okay to buy in an uptrend. It's okay to sell in a downtrend. But trying to do the opposite is just going to lead to pure disaster. Let me show you. So we're back at the chart now, okay? And what I teach you every day, okay, there's only one true professional way you can do this, is you have to look for a dip to buy. You know the saying, buy the dips, sell the rallies? Or like Patrick says, buy the dip, sell the rip. Okay? So anyway, instead of trying to think you're some genius and you know where price is going to go and try and sell it as the market's going up, you should be buying where you're selling. Okay? You need to buy the lower close. You need to buy the lower closing candles, buy the dip, and up it goes. Buy the dip, and up it goes. Okay? Buy the dip here, up it goes. Buy the dip here, up it goes. See what I'm saying? But if you think, oh, I'm not gonna buy it here, it's just gonna like go down after that, and I'm gonna lose. That's what your mind wants you to think. Remember, trading shouldn't be hard, right? But it is, right? And it is because our minds are trained to do the wrong thing. Maybe that's had something to do with the damn schooling we got taught in school. They programmed us, people. They programmed us. Because I too was doing this before, but I know now. This is why I have the moving averages on the chart for the main reason. If the 5 is above the 7, that means I can only buy. I can't sell here where it's going, oh, look at this big candle down with the big wick. It's going to go back down now. My moving averages won't let me do it. That's why I use these 2 moving averages, okay? And, you know, some people, well, I'll just put it this way. If it's a lot easier to buy a dip when the trend is up than it is to try and sell like a higher close candle, right? It's a lot easier to buy it with the trend than try and sell. Like right here, see, say you sold it. Say you sold it right up here, okay? Did it go down very much? No, and then it went straight up and you would have lost. See what I'm saying? There is people doing this. They're doing it with some kind of robotic instrument and tool. That's what they're doing. And that's why you'll see the price go up and down, and go nowhere for a long time, like right here, up and down, up and down, up and down. They have robots running there, man. You're not a robot. You can't get out with just a few ticks. They go for like 2-3 ticks, man. And that's it. And then they take their profit and they do it again, and they do it again, and they do it again. It's unbelievable. Us humans can't do that. We can't think that fast. Okay? So we got to try and buy the dip. And the easiest way to spot it is like I've showed you every day in my videos. Look for a lower closing candle that comes into the moving averages. Buy it, up it goes. See? Buy it, up it goes. Lower closing candle. Buy it, up it goes. It's simple once you program your mind to think that way. But whatever you do, don't freaking try and sell in an uptrend. You're going to get killed. Okay? And it's real simple. These 2 moving averages tell you. Don't fucking buy. I mean, don't sell. Just look for the dips to buy. And think about it. If you buy, okay, say we bought this one, okay, right here, and it gone up. Okay, that's all fine and dandy, okay? But let's say we bought this one at the high of the wick right here. And look what it did. It went right back down. See? When you're buying a lower price on the dip, you have less risk to lose. If you buy up here, you're gonna lose more You see, that's why you want to buy it at a better price so your risk is less. Because if it goes down from here, you're going to lose less because you bought it at a lower price. You didn't buy it up here at the high price. You see what I'm saying? You do, you do. Anyway, I hope you learned from what I just explained to you. I hope you learned it, and I hope it helps you, especially the part I read to you. Go back to that part later on or whatever and just pull up the where you see the white, the white paper with the writing and read it. Stop the video and read it to yourself. Read it 2 or 3 times. Or the next time you sell in an uptrend, go and read it. Print it out. Put it on your trading desk. Why did I just fuck up and sell in an uptrend? Because my mind has programmed me to do that. That's why. And you have the answer right there. End in this video. Okay. Enough said. Let's keep going. The US 30? Yeah, I already started this video and I clicked the wrong button. And yeah, I had to start over. So anyway, hidden divergence right here. We're coming down. We retrace. We draw our line. And our line is hidden divergence. If you would have sold right here, stop would have been 24 points. Went down 46. Okay? Down here, we had a double bottom. Buy it, up it goes. It hit the target too. The stop would have been 35 pips, and it went up 59 pips. Here's another double bottom. Oh, yeah, right there. That's that one. And then there's this one here. We went up. We retraced. Went up higher high. Retraced. This is hard to see hidden divergence. Right here like this and like this. And you would have got in right here at the pivot, and it went to the first target. That is the Dow. Let's look at the S&P. We had basically a triple top, double top, whatever you want to call it. It was divergent. You would have sold right here. Your stop would have been up here 5 points, and it went down a total of 20 points. Then down here we got a low, a retracement, lower low, and we would have got in, I guess, right here. I don't know why I put the arrow there. I don't know. See, my mind programming again did that. Okay, you would have got in right here. Your stop would have been S&P 7 points. It went against you 6 points. Look at that, eh? But then look at that. Went up 34 points. Let's take a look at oil now. All right. Glad I didn't trade this today. There was no divergence. That's why I didn't trade it. There was no divergence here. Looks like there should be, right? Even from here, low retracement, lower low. Look, it's not divergent. There's no divergence. So all that you could have done is sell a higher closing candle and down it goes. Could have done that there, or you could have bought this lower closing. See, I wouldn't do this trade because the price exceeded my 2 moving averages. And usually when it exceeds the 2 moving averages, it keeps going like all the way down here. Didn't do that, but still, this trade I would have never bought that dip right there. But this right here, yes, I would have. Lower closing candle, I would have bought it right there, and up it goes. That's it for the oil. Let's look at gold. What did gold give us? Oh, it gave us hard to see hidden divergence. Let's take a look at it. Right here to right there. Right there to right there. Just like that. Would have got you long right there. And it went up 130 points basically on gold. XAU USD. Gold. Now, where's the next trade? Well, the next trade would have been right here. Lower closing candle. Buy it. Would have suffered a little bit, and then it went up. And here's another one. Lower closing candle. Buy it. Up it goes. Lower closing candle right here. Buy it. Up it goes. See, the longer the move goes, the more waves you see, the less likely that it's going to work. You need to do it mostly from the bottom of the move or from the middle of the move. Now, I know when price is here and it's trading, you don't know if that's the middle of the move, right? You have nobody knows. But the first and the second entry is your two best entries. If you try the third one, it might work for you. Okay, I'm talking about buying dips on lower closing candles in an uptrend. Okay, so the third time, it's less likely to work for you. Let's look at the pound yen now. Oh, pound yen, very, very bad boy today. You're bad. You didn't go anywhere. How many damn pips is this? 10 pips? 30 pips. All right. I don't see no trade here. I'm just skipping it. Let's move on to the euro yen. Oh, God, look at the euro yen. Chop, chop, chop. See how they do that, eh? They chop one market and another one, they go on a long trend. And there'll be a day in the next few days, the pound dollar probably do a long trend, and the NASDAQ won't go anywhere. It'll do what the pound did today. See what I'm saying? That's how they fool people. That's how they trick you. Remember, this is just some people on the other side that they have the power to push the market, and they do their best to push you in the wrong way into big losses. That's why you got to be careful and watch out for their dirty little tricks. They're dirty. Remember, it's a zero-sum game. In order to win, you know, you got to take money from the other side of whatever you're trading. And for them to win, they got to do the same thing. So be the winners, eh? Let's look at the pound now, the last instrument of the day. See, look at the pound. Look at that. See the long trend? Look at the pound yen. Look at this shit. Look at this. Look. And look at the pound dollar. Look at that. Look at that beautiful trend. Woo-wee. Had to take a little breather there. I was talking too much. Sorry about that. So anyway, here's the pound dollar. It dropped down and then it swooped back up again, as you can see. So to draw this divergence in, we first would have drew it from here to here like this, okay? Just like that. But our 5 did not cross up until way over here. So do we really want to extend it? Yeah, we can. We can extend it all the way down here. And extend this one. Right there. So here's the entry point. And our stop would have been right here. And guess what? They came and they got your stop. They got it. Because they knew the orders were all here. For all the people buying, 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 their stops were right here. And what did they do before they took it way up? They came and they got your stops. Yes, indeed. That is what they did. So look at the next trade. I don't know. Do you want to extend it again? See? Or would you give up by then? Right? Sorry, took me a while to put that where I wanted to put it. So your next trade would be right here. So say we lost on this one. Say we bought right here and we got out right here. It looked like, oh, it's going down. So we lost 9 pips, okay? Now say we did it again, okay? This isn't a good time to trade either between the UK session and the US session. I do not trade in the black box here. I only trade in the light gray or whatever color you think it is. I'm colorblind, so I couldn't tell you. So say we got long right there. Stop would have been 15 pips. And how far did we go up? 78 pips, ladies and gentlemen. Okay. That's it for today. I hope you learned something. especially what I wrote out there, why traders lose. You know, doing the wrong thing in an uptrend or doing the wrong thing in a downtrend. Okay? But anyway, I just want to say, if you like these setups, you know, all you have to do is click on the link below this video and you can pick up your copy of my Forex Divergence course. It is the best in the world, I do believe. I've seen all the rest of them. None of them match the caliber of my easy, very easy laid out system. I tell you exactly where to put the stops. At most times never comes back to your stop. And I tell you where to get in. The moving averages tell you what not to do and what to do as you trade. Anyway, so I just want to say thank you so much for stopping by today and watching my video and listening to me. I'm very sorry that I have some brain farts. It's because I've had a couple of strokes, but I'm still here. I'm still kicking. So anyway, good luck and good trading. We'll see you here tomorrow. Same time, same Divergence channel.